Good morning, everybody, and happy Wednesday. Hope you guys are doing well. Let me know if you guys can hear me as well, and then we're going to get started here in just a second. All right. Good. Good. Sounds like everything is good. So I think we should be able to get started here. Okay. Perfect. Good morning, everybody, and happy, Wednesday. Serge Berger here from thesteadytrader.com. This is our Set the Market morning call, 10 to 15 minutes going through some of the most important things on our radar. If you are new here, that's a little bit of introduction of what we do. Also, for anyone, please make sure you give us a thumbs up like on the video and you subscribe to the channel. Very important, because that way you're updated in real time when we go live. We're going to do a lot more live things. We have been doing a lot more live stuff as this market is getting more and more newsy, seemingly by the week. Number one, and number two, also it helps us to be able to continue doing this, because if people don't subscribe, we will have to stop doing the morning show, and I think a lot of people enjoy it. So that's it. So let's go through the morning pad, as our notepad, I should say. Been added here for longer than I care to admit already today. First thing we're going to look at is bond yields quickly and how this correlates to things like copper and a trade setup in Freeport-McMoRan. We'll look at uranium, and we're going to start off with Europe this morning. I mentioned this and then we'll actually want to show you guys something. Actually, before we do this, let me just show you guys a trade I just closed just before I came on. I was on our internal research call. I'm going to quickly share with you a trade that I did. I'm going to bring it over here if you give me 1 second. Here we are. I just want to share with you why this is the year of the trader. Okay. So, and this is just a intraday day trade. So obviously this is not going to be appealing to everyone, but just so you know. So this is gold futures. Okay. Now just bear with me. So I just closed this a few minutes ago. Why? So we have two specific trading indicators that work in any environment, but in this kind of environment are absolutely shine. So we had a sell signal about an hour ago in gold futures. I went short futures, and then what happened, that's this little red arrow. And then what ended up happening is we got a vertical X Pro severe short-term oversold signal. That's on a 5-minute chart. And gold not only first dropped hard, but then now is rallying very hard. Now remember, the vertical X Pro doesn't tell us that this thing is now going to go back all the way up. It's just telling us it was oversold. So I didn't do this trade because I was on another call after that, but I took profits once we got vertical X Pro oversold signals. If you are using vertical X Pro, either that or using the TST trender, which I urge you to use in this environment, it's an absolute beauty. Make sure you also join us. We have our first 6-week, the first session of our 6-week lab. It's like a boot camp we do. We meet once a week. It starts today. I believe it's at 11:30 Eastern. I'm sure Joel can give you more information if you want to reach out to them. Support at thesteadytrader.com. So I just want to give you a quick idea of why we're calling this the year of the trader. It's not just randomly something we're pulling out of the air for marketing reasons. Like, it actually is an unbelievable trading year so far, and I think we're really just getting started. So just so you know, that's what I did. I shorted there. I took some profit there just before. Again, if you're not into day trading, don't worry about it. But the point is, this kind of volatility, we think, that's our base case, is going to start moving into the daily charts. We haven't seen that too much yet, but it will, and I think that's going to be where there's going to be even more opportunity. So FYI, that's what's going on over there. Hopefully that's helpful for a little bit of perspective for those of you guys that like to be involved in some of that near-term stuff. Now, I want to quickly start off with something that I mentioned last week or even the week before. And, I'm mentioning it here another time because it usually takes a long time for people to kind of open up to an idea like this. This here is the European stocks ETF, right? And so what you have here is a long-term weekly chart. These are weekly bars. You can see this goes all the way back to 2016 down there in the bottom left-hand corner. Now, again, anyone that's ever looked at a chart or maybe done technical analysis 101 would see that this is probably not a bearish pattern, right? If this was a stock and this was NVIDIA, everyone would be screaming buy. Because it's European stocks and they've been underperforming for a while, retail investors aren't really catching on because it doesn't have the sexiness of NVIDIA. But of course, they're beating the living shit out of NVIDIA and the S&P 500 year to date, and we think that's going to continue, not at this rate, but over time. So I'm going to give you the VGK ETF. If you're an ETF Silo Pro member, an email alert will be going out on this one and another one. I don't want to give you both, obviously, here because this is a open session for everyone. But just know that European stocks are looking great. Is it possible they're a bit near-term overbought? Of course, it's always possible. But we think the broader story here is just going, just so you know, they actually yesterday announced that they're working on an $800 billion package, the EU, on getting their remilitarization. If that's not stimulative, I don't know what is. So, and I think this time they actually will do it. Just, my view and my research when talking to hedge funds that are involved in that market. So just as an FYI, so this is not something that's going to explode and make you 100% every 5 minutes, but this is something that might beat the living daylights out of the S&P 500 maybe for years to come. I don't know that. That's a bit of a premature call, but it looks amazing. It's breaking out of a base that it's been working on for a few years. So to me, this is the kind of stuff that I like to look at. So that's one thing. The other thing I want to quickly point out is what's going on in yields. Now, I made a chart before. I'm going to quickly reconstruct it if you guys give me just 1 second. And we look at yields, and I want to look at 10-year yields, and I'm going to overlay this chart to copper. I'm going to use copper futures here as a proxy, but one certainly could use the CPER ETF. Now, if we look at this closely, you will see that there is a very close relationship. Oh, I messed this one up. I need to add this in a different way. Add new price scale. Here you go. All right. Now, if you don't squint too much, you will see that there is a very positive correlation between the price, the yield on the 10-year note and the price of copper. It's not a perfect relationship, but that you can see 10-year yields basically topped earlier in mid-January, around 4.8%. They went down as much as 4.1 the other day, and copper basically went down with it. But one of our most bullish views that we have is on copper materials, like even uranium. And I think a lot of you guys that are members of our things, and we're walking our members through this very, very closely all year. And for as long as, I think this is a 5 to 10 year opportunity with like multiple X returns potential. So this is interesting. Just keep in mind, so if you're looking at copper, 10-year yields have been coming down in the US because of a growth scare. And so copper started reacting to that, but it reacted to it, like a month later. Now, look what's happening today. And this is the here and right now. So this is really interesting. So I'm going to first show you CPER, the ETF. So this is an ETF that tracks copper. Again, I think this is a double or triple over the course of time. See how it's not rallying yet? It had a big move. It's up nicely year to date. But look at copper futures today. Now, remember, this stuff is volatile. Copper futures today are up almost 5%. So that's this move here right now here. Now, again, it's just one day. The day just starting, but this is nice. This is what you want to see, because at some point the economic gravity is no longer going to be an excuse for people not buying something like this, because there's so much demand for stuff like copper and so little supply that is completely out of whack. So, if you like that chart before that I showed you in European stocks, we can draw the same exact type of analysis here, right? It looks like this. And then we can do this kind of a thing, right, that I showed before. So this is the same exact chart. I'm going to go back and forth, right? So this is the price of copper futures. CPER would be the ETF. Watch, I'm going to go, oh crap, I just got rid of the other one. What was the VGK? VGK would be the ETF on European stocks. Of course, I deleted it, so now I have to redraw it again. Oh, weekly, here we go. Here we go. This is the chart I showed you guys before. Okay, so same exact chart pattern. If all you like to do is look at patterns, which I always caution about, there is more to it than that. But this is the same idea as what you're seeing in copper for different reasons to some extent, right? Maybe many different reasons, but it's the same kind of pattern. If this was Nvidia or your favorite chart chasing stock or Palantir a few months ago, everyone would have loved it. But because it's not something that's on CNBC every 5 minutes. People have less respect for it, but of course that's exactly the risk I see for so many retail investors going forward, that they're going to just continue only looking at stuff that may no longer work for a while, right? Not because they're bad companies, but because the positioning is so extreme that there's literally no more money you can attract because everyone's all in, right? So that's the risk there. So that's two ideas. That's European stocks, I gave you a ticker. That's copper. I gave you a ticker on that one as well. Now remember, copper is volatile, so this is not, first of all, this is all only educational. I'm not giving advice here, but this stuff's volatile, so don't get caught up in this. And then I do want to quickly talk about a stock here that would be falling in line with this. Now this one's doing terribly. So this is Freeport-McMoRan. Not only is this bearish from a trending perspective on the market rover, so for those of you guys that are using our amazing market rover tool, you will see that Freeport-McMoRan, which is a copper mining stock, not only is it bearish trend, so you see how it nicely got us out. If one would have been long up here in the bullish trend, it got us out around $44. It's now at like 25% lower at like 34, 35. It even gave us a sell signal. If you were an Inner Circle member, you're receiving an email this morning on a trade alert on this one. We're going counter trend on this one because the market is very jumpy. But just know that Freeport-McMoRan, which again, we're very bullish longer term, it's also coming into a pretty big support zone. If it snaps here, then obviously it might go lower again, but we actually think there's an opportunity to potentially see if it might bounce a little bit. So that's another idea. And then last but not least, since we're talking about materials, let's quickly go through uranium. Uranium, I've been talking about a lot. I'm going to continue talking about it probably for years and years and years to come. This is a huge story. We are in a huge deficit in terms of the amount of demand that we have for energy, which is a direct, a correlation to how much demand we're going to need. We have for materials like uranium, which goes into creating energy, right? Same thing actually for copper too. So we're watching this very closely. I'm close to dabbling a little bit on the long side in uranium. Again, this is a multi-year view, right? But I think even from a trading perspective, it's looking more and more interesting. We don't have a buy signal yet. So for those of you guys that are using the our trend or momentum indicator, just know that it's all it's done. It actually gave us a beautiful sell signal a few days ago. And uranium then dropped as much as 17%. So I'm actually looking for potential exhaustion signals here for a potential bounce back higher. So that's three things here pretty quickly here today. If you guys have any questions, as always, please let us know. We're going to be we're going to be in the chat room here shortly in about 15 minutes, and we'll be feeding trade ideas throughout the day. And then our first session starts at 11:30 this morning if you're using the trender and and the Vertical X Pro if you're part of the Traders Trifecta. Otherwise, you can purchase a ticket for that 6-week class as well if you reach out to Joel. So that's where we are. Hopefully this was helpful. We'll see you guys back here tomorrow at 9 o'clock. Tomorrow, remember, it's Ticker Thursday, so make sure you bring your tickers. And as always, please make sure you subscribe to the channel. Give us a thumbs up, like, so we can continue doing the show. And also, so of course, you get updated in real time when we go live with our analysis. Hope it is helpful. Any feedback is always much appreciated. And have a good trading day.